Hey traders, welcome back to this week's stock market forecast. We're going to be looking at the global benchmark indices in today's video, and I'm also going to be showing you the best stocks to buy now in the US stock market, as well as the best stocks to sell heading into next week in the US stock market. Okay, so moving on to the portfolio selection part then for the global benchmark indices. And the first thing we want to look at is the VIX. What is the VIX doing? Well, we discussed in yesterday's weekly Forex forecast, we had the US election last week, and we saw the VIX collapsing because of this. It's now making its way down to the negative side in the performance metrics of the Hedge-Dash quantitative analytics platform. And what this means is we go into next week with a risk on bias, and I favor buying equities over selling them next week, although we will look at equities to both the long side and the short side in today's video. So if I click the in play button here, what this does is it separates out the benchmarks which are strong and getting stronger and the ones which are weak and getting weaker. So we want to focus onto the short side. And you can see the Hang Seng, the Russell, the S&P 500 and the TSX are all benchmarks that I want to be focused on next week to the upside. The Hang Seng, we are starting to see that stimulus coming into China. The Russell and the S&P are benefiting from the US election outcome last week, where the markets are looking at Trump coming in, cutting corporation tax, imposing tariffs. The markets are viewing this as inflationary, which is good for equities. And also we have the TSX to the upside. If you watched yesterday's weekly Forex forecast video, you'll know the Canadian dollar is the best short. And we're seeing, crude oil prices coming down. This is negatively affecting the Canadian dollar. And if you have a weak currency, this is supportive of the benchmark. So I do also like the TSX, the Canadian benchmark, to the upside next week. Alongside that, although I prefer looking at long opportunities next week in equities, we will also look at the CAC, the French benchmark, and Euro Stoxx 50 for potential short setups next week. Kicking off the benchmarks then with the Hang Seng, you can see we're basically just correcting. We've got this kind of range. So I do think, if we pull back, we kind of set up this sort of A, B, and then C. And if we breach the 1986.87 next week in the Hang Seng, this is where we become oversold intra-week. So this is where I'll be looking primarily at stepping in and buying for a 1 or 2 day reversal to the upside. The gold level on here, just as we go through, like in yesterday's weekly Forex forecast video, this is where this market would be extremely oversold intra-week. It means that you roughly only have a 5% chance of going much further. So whether I'm already long or not, I'm risk managing a losing position, or I get the opportunity to step in with an initial position below the 18,965.55. This is the second place. Next week, I'll be looking for a 1 or 2 day reversal to the upside. And the third thing you can look for is if it starts to move back down towards its lower bound, maybe it tests this low and stops, and then you get the break back above the moving average. You can look for that bull flag setup intra-week where it pulls back, hugs the moving average, and then turns away. And the upside target next week for the Hang Seng is the 21609.50. I can only buy this market next week. I cannot be a seller of the Hang Seng next week. The next index I like to the upside next week is the Russell. We had that explosive move off of the US election because the market, again, looking at Trump to come in, stimulate on the fiscal side with corporation tax cuts and also implement tariffs, which are inflationary. And at the same time, we're getting a cutting cycle in the US from the Federal Reserve. So all of this is inflationary, and this is why we're seeing small caps especially outperforming. So what I'd like to see in the Russell next week, I'd like to see this pause, I'd like to see this pull back if possible and trade below the 2315.68, because if it does that, it becomes oversold intra-week. And of course, I can either be a buyer or do nothing. I cannot sell this market. I will be looking, if we trade below this level, for momentum to start to fade on the 1 hour, the 15 minute, the 5 minute, looking for those reversal patterns, double bottom, inverse head and shoulders for a 1 or 2 day reversal. And that's usually what you get. You trade into these upper and lower bounds. It takes a day or two to get there. And very often you get a day or two's worth of bounce from them. If we breach this, as unexpected as it is, this is just a backup. But if we breach this and I'm already long and we trade into the 223172, this is where we become extremely oversold intra-week. And this would be likely, if I was already long here, where I would cost average this position and try to exit for a break even over here. Again, these are all techniques I employ in real time with GMT members with real-time setups throughout the week. So if we start to pull back towards the lower bound and we do not test it, especially with the Russell, because this is a very strong market here, I would not be surprised to see this kind of pull back, flag, and then break back above the moving average with momentum. So you get this kind of correction and breakout like this. It's kind of bull flag breakout. If it does that, you can look for it to pull back into the moving average and that kind of bull flag setup away into the upper bound. Great profit taking target to the upside next week, the 2483.59. Next is the S&P 500. Again, I can either be a buyer or do nothing. I cannot sell this market next week. Big gap up on the election, benefiting to the upside for the same reasons as we just discussed with the Russell. But of course, the Russell is more cyclical, more sensitive to the economic cycle, so the Russell is outperforming. So I prefer the Russell. However, I am also looking for further upside in the S&P. Any pullback in this market, and ideally, as always, I would like to see it breaching to the downside, the 5852.78, because that's where this market would become oversold intra-week, and I'll be looking for a 1 or 2 day reversal to the upside if it does that. If it blasts through here and takes out the 5710.02, very, very, very unlikely, but it's always good to have a backup plan. If it does that, and I'm already long from over here, this would be the second place, especially if we take out these lows. That would be looking for a 1 or 2 day reversal to the upside, you know, whether I'm cost averaging a losing position from up here or this is an initial position. And the third and final thing is you could look for, you know, very often the moving average turns sideways. You get this kind of correction and then it breaks back above it. You get the pullback, it hugs the moving average, and then you get that bull flag set up away into the upper bound for next week. The profit taking target to the upside is the 6138.29 in the S&P 500. And the final benchmark we're going to look at to the upside in today's video is the TSX, the Canadian benchmark. Again, I reiterate that the Canadian dollar is a fantastic short, and as the Canadian dollar deteriorates, this puts upward pressure on the benchmark. So I'd like to see this come down and, as always, breach, in this case, the 24351.84, because then if it does that, this market becomes oversold intra-week, so during the week. And we also have a low over here, which sets up very nicely a kind of textbook head and shoulders. You can see here's a correction. The correction ends. We break. It's probably a one wave. We pull back. We test the left shoulder, also turning oversold intra-week in the process. What a great place to start to look for a 1 or 2 day reversal. Probably even you could hold on to that. But I'll specifically, short-term basis, be looking for 1 or 2 days worth of movement next week to capture. If we blast through there and take out the 23944.28, this is where we would turn extremely oversold intra-week. It would mean that there's been some kind of major reversal, because if you test this, it means there's abnormal momentum. We shouldn't really be testing these levels. We do occasionally if there's a very kind of bullish or bearish catalyst. So it's not expected, but if we do breach the 23,94428, just be aware this market becomes extremely oversold during the week, and this will be the second place I'll be looking for a 1 or 2 day reversal to the upside. And the third or final thing, especially as we've already got this kind of big correction breakout, is look for this to pull back. If it doesn't reach the lower bound, you can look for the momentum drive back above the moving average. You know, it should be clear, shouldn't be difficult to see. It kind of bull flags, corrects into it and drives away. In this case, very much like this, breaks above it, consolidates into it, drives away. In this case, you can be looking at 25166.95 as a good profit taking target to the upside in the TSX next week. Okay, so I do have bullish bias overall on equities next week. However, there's two benchmarks to the downside I'm also going to keep my eye on. They are on my watch list for potential shorts. I can only short them or do nothing. I cannot buy them. If I'm going to buy any equities or global benchmarks next week, it will be the ones that we've already looked at to the upside. So with the Stoxx 50, what I'll be looking for next week is, can we get this pushing higher? If we get this market pushing higher, taking out the 4916.22, especially if we blast through here and take out this Kiev resistance over here as well. This is now going to be overbought intra-week, which greatly increases the chances of reversing, roughly 7 out of 10 chance. And if we take out this high, we're also trading into resistance. So I would start to look from above here, especially if we trade into this, for reversal patterns to the downside, double tops, head and shoulders on the lower time frame, looking for momentum to start to fade in this area. And then you get your liquidation as the longs pull their positions and it reverses. So I'm going to be looking at that setup heading into next week if we can take out the 4916.22. If we blast through here, as unexpected as it is, and take out the 5030.30, this is the second place. Whether I'm short already or not, I'll be looking for a 1 or 2 day reversal. And the third and final thing, of course, is you can look for it to start to make its way up, to correct early on in the week, and then you get that bear flag set up. The moving average follows it, and you can look for that consolidation into the moving average and the move away In this case, profit taking target to the downside is the 4688.07 next week in Euro Stoxx 50. And the final benchmark I like to the downside next week is the CAC, or the French benchmark. So looking for the same thing, I'd like to see this pull back, ideally breach the 7543.42 and take out this high. That's going to be a great place to start to look, because we become overbought intra-week, then we run into a key area of resistance, we've suddenly got confluence for a potential reversal. So I'd be looking for momentum to fade, looking for those reversal patterns, looking for the longs to liquidate for a 1 or 2 day reversal to the downside. If we blast through, and I may already be short or not, but if I am short, I'm still going to be looking at a potential cost average at the 7748.18. We trade above there. We're extremely overbought intra-week in this global indice. And so I will be looking for 1 or 2 day reversal from above that area as well, whether I'm, again, short from here or not. You know, this might just be an initial position. And the third and final thing, of course, you can look for, as always, is if we start to make our way higher, and then we get a fast market. So instead of taking out the upper bound and turning overbought, we start to see momentum coming back into the downside. Look for the moving average to follow, to track it down, and you can look for that bear flag setup where it pulls back into the moving average, and then you get the move away into, in this case, the 7133.91 is the target to the downside in the CAC next week. Okay, so moving on to the US stock market and drilling down into the sectors to begin with before we look at the individual stocks. And we know from looking at the overall benchmarks and at the VIX that a bullish bias on equities is quantitatively preferable heading into next week. And the two top performing sectors heading into next week are XLY and XLC. Now, XLY being right at the top is a very, very risk on signal, because XLY is one of the most cyclical sectors, alongside perhaps tech, in the US stock market. So we can see here confirmation of what we discussed with the VIX and everything else, that we really are seeing a risk on environment kicking in to equities. So we're primarily going to be looking at some individual stocks in XLY. I want to show you a stock in XLC that looks like it's setting up nicely to the upside as well next week. And to the downside, you can see XLP is the #1 short sector we should be looking at next week. Now, XLP, conversely to XLY, is a very, very defensive sector. And so if we see XLP right at the bottom, especially if we see XLY at the top, you know, consumer discretionary, very cyclical at the top, consumer staples, very defensive at the bottom, this is again another risk on signal. It shows that we should be rotating out of defensives into cyclicals essentially. So we're also going to look at a number of XLP stocks to the downside that I do think represent quite a good opportunity next week if you're looking for stocks to short. Okay, so kicking off the individual stocks is BKNG, and this is a stock that sits in the consumer discretionary sector, and it's really performing well to the upside. Very solid trend. This is a market that I'm very interested in buying given the opportunity next week. So just like with all the other assets, what I'd like to see this come down, breach, in this case, the 4781.49. If we do that, we become oversold intra-week in a stock which I'm only looking to be long, given the chance. And this would be the chance. I mean, if it starts to turn oversold intra-week, this is where it can drop down, start to look for a 1 or 2 day reversal to the upside. As always, if we blast through there for whatever reason, it would need some kind of very bearish catalyst in all likelihood. But if we breach next week the 461971, whether I'm long already or not, this would be the second place I'd be looking for a 1 or 2 day reversal to the upside. And the third thing you can look for, it's already kind of flagging consolidating. You know, look for the moving average to flatten, and then you can look for that kind of correction breakout. You know, it's where you can kind of put your trend line on like this, and the moving average should follow, should track it up. You can look for the pullback, and you can look for that bull flag set up into and above, in this case, the 5105.04. Next is Tesla. Now, Tesla was a stock that I outlined in Wednesday's YouTube video. Just after the election, I said, this is a stock that can really explode to the upside, gave all the reasons in that video. And we have seen a huge move since the US election. Going into next week, I do think this needs to pause, maybe pull back and correct first But this is a market that I am very interested in to the upside. I would like to see this come down, breach in this case right into the moving average and breach the 298.35. If it does that, Tesla will become oversold intra-week, so during the week, and this is where I'll start to look for momentum to fade and for reversal patterns below this level. That's where we can see the kind of short covering. We get this liquidation, we see the rally to the upside for 1 or 2 days. If for whatever reason we blast through here, take out the 275.48 and probably stair step this high, this again would require a very bearish catalyst. It's not what I'm expecting, it's more of a backup plan. If, whether I'm long already or not, we breach this level, I would be looking for a 1 or 2 day reversal to the upside from below the 275.48 as well. And the third and final thing is, and in this case, you might find the moving average just kind of catches up to Tesla and it actually pulls back into it. And then you get the bull flag set up away into the profit taking target next week for Tesla is the 344.08, because above that, you start to run out in terms of probabilities of runway. And the third stock, which sits in the XLY consumer discretionary sector, which I like next week, is Amazon. Very, very strong move to the upside again. If we can pull back, kind of trade below the moving average and correct all the way into the 195.70 next week, we have a really nice high over here, which would be stair stepping. We break out. You can see we've already tested it once here. Pull back, stair step this high and breach the 195.70, turning oversold intra-week. This is where I'll be looking for a 1 or 2 day reversal to the upside in Amazon next week. If we blast through here just as a plan B, not expected to happen, but if we do and we take out the 183.22, we become extremely oversold intra-week. Whether I'm already long from around here or not, this would be a place I'd be looking for a 1 or 2 day reversal from back below to back above this level next week. And the third and final thing is, if we start to make our way down, you can look for that kind of correction breakout from the moving average, and this just becomes a big kind of corrective breakout like this. The moving average tracks up with it, and you can look for the pullback settling into the moving average before moving away into the 220.65. And the fourth and final stock to the upside next week, which I like, which we're going to look at in today's video, sits in the XLC sector, so in the communication sector. It is Fox News, and this is a market which has a very, very solid trend to the upside. I would like to, because I can either buy this or do nothing. I cannot short this market next week. But if we pull back and breach the 40.02, this is where I'm going to start to look for momentum to fade on lower time frames, looking for that 1 or 2 day reversal to the upside if we can breach the 40.02. If we come all the way down and take out the 38.48, although it's not expected, if as a plan B that happens, maybe I'm already long, maybe I'm not, but this would be the second place I'd be looking for a 1 or 2 day reversal to the upside. And as always, you can look for that kind of bull flag breakout where it breaks back above the moving average follows it, pulls back, kind of hugs it, and then moves away. In this case, that bull flag set up into the 43.09. That is the profit taking target to the upside in Fox next week. Okay, so wrapping up the video with 4 stocks I like to the downside next week, keeping on my watch list for potential short opportunities. They all sit in the consumer staples, so XLP sector. And the first one is ADM. Now, if we can pull back in ADM, you can see we're attempting to close this gap, big gap down. If we pull back and we breach the 54.15, especially if we breach the 54.15 and test this low and we kind of partially close this gap, this is going to be a great place to drop down, look for momentum to start to fade as we turn overbought intra-week and look for a 1 or 2 day reversal to the downside. If we blast through, although it's not expected to happen, but if it does and we breach the 56.17, this is the second place I'd be looking for a 1 or 2 day reversal to the downside, because at this point we've become extremely oversold intra-week. The odds of a reversal go up dramatically. And the third thing you can look for, as with all of these weak markets, if we start to make our way towards the upper bound, but maybe we take out this high and it just becomes an A, B, and a C, and then you get the momentum to the downside, you get this kind of double top confirmed breakout, the moving average turns, you turn into the moving average and you get that bear flag set up. In this case, the profit taking target to the downside is 50.10. The next stock I like next week to the downside is CL, Colgate Palmolive, another consumer staples stock. We had the big sell-off last week. We are already pulling back, and it does look like we could actually turn overbought intra-week in this. So we breached the 95.15, As with all these markets, once we turn overbought, I can either be short or do nothing in this case. So I'm going to be looking for momentum to slow, potential 1 or 2 day reversal. If we, for whatever reason, break through here and take out the 97.73, this would be the second place, whether I'm already short and looking to cost average it, or if I can get an initial position, this would be the second place above there. They'll be looking for 1 or 2 day reversal. And the third and final thing is if we pull back, perhaps we test this high and we just start to stall out. And then from here, we get that breakdown. You can look for the moving average to follow and then look for it to pull back, hug the moving average and then move away. In this case to the prior low, and the 89.98 is the profit taking target to the downside in CL. Next is KDP. And this is a market that is, again, consumer staples, but look at this, multiple gaps down and look at it just moving sideways. Very often you get a market just kind of moving sideways like this, tends to, follow through to the downside. What I like about this is if we pull back, we've already broken above the moving average. If we pull back and we take out the 33.80, we also close this gap. So this is going to be a nice area. We close the gap, we turn over bought intra-week. I'm going to start to look for momentum to slow for a 1 or 2 day reversal. If for whatever reason, it's not expected, but if we take out the 34.73, this would be the second place. Whether I'm short already or not, I'd be looking for a 1 or 2 day reversal. And the third thing is you can see it already kind of hugging the moving average. If we start to pull back and instead of taking out the upper bound and closing the gap, you get momentum to the downside. You can look for the moving average to follow it, and basically it becomes this kind of breakout, right? You have this kind of trend line you can draw on here. Breaks down, pulls back into the moving average. You can look for that bear flag setup. Profit taking target to the downside next week is 31.95 in KDP. And finally, we have HSY or Hershey Company. This is a market I'm only interested in potential short opportunities. If we can breach the 182.12, this is all in a downtrend. So this would be a nice place to step in, especially if we breach quite deep. But if we do breach and take out this high, I'm going to start to look for momentum to fade, look for those bearish reversal patterns, and I'm going to look for this to liquidate for 1 or 2 days to the downside. If we blast through, we get some kind of bullish catalyst and it sparks a rally, which takes out the 188.58. This is where we turn extremely overbought intra-week in a market I'm looking to be short, and whether I'm short or not, this would be the second place I'll be looking for a 1 or 2 day liquidation to the downside. And the third thing, if we start to correct, you get the moving average, maybe we pull back, get A, a B, C, and then we start to fail here. And instead you get this kind of breakout. You can look for the pullback as the moving average starts to track it, moves into the moving average, hugs it, and that gives you your bear flag setup into the 169.21. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge- platform is included with every GMT membership.